Hey there, it's Ben Everingham and Simon Everingham here from Pumped On Property. In today's video, we're going to talk about the best free property website. So we're going to break the video into three different areas. The first is the market, which is the high level. The second is going to be at the suburb level, and the third is going to be at the property level. So these are the free websites, and we're also going to talk about a couple of the paid ones where we find most of our information that we've used to buy over $200 million worth of property for ourselves and our clients. So why don't you start at the highest level, Simon, today in terms of talking about the market level. What resources do we use and how do you find them helpful?
So to be honest, these guys are actually one of my favorite resources to use. I'm constantly jumping on and have the updates coming through on a monthly basis to check it out. They're called HTW, which stands for Heron Todd White. And what they do is a monthly review about the entire Australian property market, and they break it down into each major metro market, regional markets inside of those states, and they indicate which stage of the property cycle that each of those markets are sitting at, which I really like because it can help you get a really great understanding. Because as we both really like with investing in property, timing is absolutely key, and these guys can really help you out when identifying which market is sitting at the right stage of the property cycle. But do you want to tell a little bit more about what that property cycle actually means?
Yeah, so obviously not every market can go up exponentially forever, otherwise we'd have a bubble and we'd get a major correction. But what happens is that, Sydney and Melbourne might have had a really good 6-year run, and then they might sit flat for a little while, and somewhere like Brisbane or Perth or South Australia might kick off, or some of the regional markets after that. So it's just the cycle that naturally flows where, prices hit an affordability ceiling or sometimes above affordable ceiling, and then they either sit flat for a while or they correct, and then people have to start looking somewhere else to put their money, and that place starts moving. So there's a lot of things on top of that obviously drive property prices and the timing and the cycle, but at a high level, different markets move at different times. And so Homely's really cool because it produces really detailed reports, but also a nice one-pager with a clock where you can actually see where Sydney, Melbourne, Brisbane and the other major markets are at any point in time. So from a market perspective, we also find Google to be a really good resource in terms of just from a maps perspective. That satellite technology can be really good if you're investing interstate and really wanting to get your head around an area where the train lanes are, where the hospitals are. You can overlay all sorts of cool stuff in Google, like hospitals, like schools, and drop all those different pins that are important to you. So coming down from the market level, going to the suburb level, I suppose that's where the rubber really hits the road. So let's talk through a few of those and how we use them.
There's so many different sites that you can use to get some better information about the suburbs. Probably some really good information. They release lots of great articles on a weekly basis, and from lots of different sources, lots of different property investors, lots of different buyers agents, real estate agents, and that's called yourinvestmentpropertymag.com. So they have a whole bunch of information. You can just go to the front page and there's lots of really cool articles that you can look at, but then you can also type in specific suburbs. So once you've got to the market level and you understand which market, this is going to help you identify certain things that are inside that suburb that are really important, like vacancy rates, like population, like median prices, yields, vendor discounting, all of those really important things that help you get a better understanding of the actual way that suburb has performed historically and is currently ticking away.
Yeah, and so another really good website for somebody looking to buy in a market that they're not familiar with is a free website called homely.com.au. You can literally punch in the suburb that you're thinking about, just have a play with it, put in the suburb that you're living in now. And what it is a ranking or a star system from 0 to 10. Obviously, the higher the star ranking, the more livable the suburb is. Just be careful because agents obviously play with that. They like to be in the top 20 suburbs on Homely reports. So, those rankings, as we've found with TripAdvisor and things like that, can be a bit dicey every now and then. But you get a really cool insight into people that love the suburb and why they love it in terms of infrastructure or schools and what they enjoyed about living there. And then you get the full flip side, which I love and you don't get from local agents, and that is the haters, like why they hated living there, why they hated renting there, and you get a really balanced perspective if you've got a suburb with a decent amount of reviews in it. So really powerful if you're an interstate or out of area investor to just get local market knowledge without asking a local who's got a strong bias about it.
Yeah.
Sliding on from there, what are we talking about next?
Something that's really important, and we like to deep dive right into these couple of resources, and that's the Australian Bureau of Statistics and also local stats. I'll combine these two together because we kind of use them in a similar way to get an understanding of the demographics that are involved in that particular suburb. So you can look at the average age in these suburbs. You can look at the percentage of owner-occupiers compared to the percentage of renters. You can look at the... what are some other things that they say? Sorry, just having a mind blank.
We're not going to edit that out. So you can look at, just having a look at our data sheet here, as Simon said, like you look at the average household income, you look at the average age, you can look at who's married, you can look at the demographics in terms of religion and gender, you can look at who's renting, who's owner occupying, and all of those other little statistical things. I find it really powerful to look at the mix of households. So are they single income households, are they older people going into retirement and potentially leaving the area, or are they what I like to buy in, which is areas with established families, mature families, and people that want to stay there for longer than a few years, that really want to make a life for themselves over the next 10-15 years in the area.
For sure, and moving on to the next one now, which is really important. I think it'll be best if you really break down exactly what this is, but it's dsr.com.au, and these guys, you now have to pay for their stuff to get the deeper level, but if you go onto their website, you can still get what that particular suburb's current DSR score is. But can you dive in a little bit more about what a DSR score is?
Yeah, so DSR score is the demand to supply ratio score, and effectively if it's a score out of 100 categorized into different quadrants or different areas, effectively that lets you know how hot or cold an area is. Now let's think about Melbourne and Sydney in 2016. They were really, really hot, let's just say that without being too rude, and the DSR scores in those areas, when your auction clearance rates are above 80%, your DSR scores are generally very, very high as well, 75 to 100%. The sweet spot for me when I'm looking at DSR is a suburb between 55 and 70%, which represents an opportunity for me as the buyer to get in at a good price, but strong enough demand to potentially warrant some increases in prices over the next 10 years. And then anything below 55% is something that I personally avoid, just because it's kind of like Perth in 2016, if you know what I mean, where everybody was leaving the area and nobody wanted sort of anything to do with it, and there was still a fair bit of blood on the streets over there. So great little indicator. Again, none of these are silver bullets. You've got to look at them all one versus another and use these data points to paint a picture of an area.
Perfect. So moving on from that, when you're identifying a suburb and to invest in, you really want to understand absolutely everything about that suburb. So this is where Google Maps comes back into play, because you can really dive in and get a great understanding of where the main roads are, where the bus routes are, where the train lines are, the shopping centres, schools, sporting precincts, commercial shopping, retail shopping, foreshores if you're on the ocean, universities, major business districts, all of those things. And when you've identified the perfect suburb that you want to invest in, might be important to print out a little Google map of that suburb and highlight all of those things that I've just mentioned there.
Yeah, so what I like to do in an ideal world, because I'm a bit OCD as you all know, is I like to print out a map or 3 maps of the same suburb, and on one of the maps I put in all of the streets that I don't want to buy in, the main roads, along the train lines, next to schools, next to parks, next to commercial or industrial, near the phone towers, for example. On the second map, I'll then put in, I'll jump on realestate.com.au and go to the sold section, and I'll put in a price bracket, I suppose, of the cheaper third of the suburb, the medium pocket of the suburb, and then the most expensive pocket of the suburb. I'll give each of the sales a different colour code, so again I can sort of see where the hot areas are, like in terms of where the most expensive pockets of the suburbs are. And I like to buy, so does Simon, around that middle to premium pocket, because we know quality goes up in value faster than rubbish. On the third map, what I like to do is, as Simon said, sort of map out where those key pieces of infrastructure are: schools, shopping centres, train lines, etc. And then I sort of look at the three maps sitting side by side, and I try and work out, like, you know, where exactly streetwise that I want to be.
Perfect. So let's slide out of the suburb part of this video today and start talking a little bit further about the property. So now you've identified the right market, you understand absolutely everything there is to know about that suburb, and you know it better than the one that you live in right now.
You definitely should.
So once we get down to the property level, where should we start?
Property is pretty simple. Everyone knows realestate.com.au. Some people know domain.com.au. Can be a really, really nice starting point in terms of jumping online and seeing, you know, what's for rent right now, what's for sale right now, what's sold in the last couple of years as well. It also helps you identify who's who in the zoo in terms of who the agents are right now that have the listings online. So that can be a really, really nice starting point at that property level. We also use another website called openagent.com.au. There's another website called ratemyagent.com.au where you can actually punch in the suburb name, identify who the 3 top performing agents are in terms of who's making the most sales, who's selling the most expensive properties, you know, who's doing what in the area, and then, you know, you can write down their names, numbers and emails and reach out to those guys, tell them what you're looking for. So then you've got realestate.com and Domain working for you, plus the 3 top performing local agents, because they know specifically what you're after.
Cool, so we've worked through some of the free sites that you guys can use to get a really great understanding of investing in property in Australia, but some of the paid resources where you can get some of the most crucial and important information to make sure that you're not making absolutely any mistakes when investing in property.
Cool, so what do you sort of use when you're doing your suburb research? What do you think some of those major paid sites are, or, you know, paid places of information where you can't get the stuff that we've just talked about?
So my favourite paid source to use is definitely RP Data CoreLogic. These guys are an Australian property analyst firm, and they look at absolutely everything when it comes to property investing and property in the Australian market. They produce so much information. They do sales history reports, they do suburb statistics reports, they break it down, very easy to navigate, very easy to use, and they're actually quite up to date as well. So all of the information that they have is really up to date and really important.
And just to put into perspective, like, how influential these guys are, they feed both realestate.com and sometimes domain.com.au, so really powerful go-to place. One of my favourite things is looking through the sales history, because realestate.com at the moment only might have 30 to 50% of recent sales, where CoreLogic has everything. As Simon said, the most thorough reports on statistics relating to the demographics in the suburb that you've ever seen. They also provide, at the click of a button, very, very conservative and very, very accurate valuations for the property you're considering buying. So, you know, you might be looking to buy a property, you might decide to subscribe to them for a month, get all the information you need on the suburb and then unsubscribe, or you might take on a 12-month subscription if you're thinking about doing quite a bit of stuff, or you may just pay as you go. So it's quite flexible, it's not that expensive. You only get the state that you're actually looking to invest in, so it's broken up into all the different regions in Australia. They actually just brought out another company that we love called Residex. Residex were predicting or producing reports that predicted price growth, you know, in Brisbane, for example, Sydney, Melbourne, or New South Wales, Queensland, Victoria. I've been purchasing their reports now for 8, 9 years, and you know, they had a very, very high confidence rating. CoreLogic's just bought them out, so it's going to be interesting to see what they do with that business and those reports now that it's under the one banner.
Definitely, and there's another group called BIS, Oxford Economics, who actually do reports similar to Residex, where they'll actually predict the performance of markets moving forward.
Yeah, without a doubt. Those guys produce a forecast report. You can generally read the summary of that on the ABC's website, and it's normally, each time they release one, picked up by all the major media outlets. Again, it's quite expensive. You might be able to negotiate down to $1,000, but generally they're sort of somewhere between 2 and 3K, but can be just another interesting data source to get a finger on the pulse. One source that we didn't mention, I suppose, now that we're going a bit broader, is CoreLogic actually do have a really, really high quality market update. You and I both read that and watch that video each month, and that can just be a really, really nice high level summary of what's going on. At a market level, there's another bloke in Queensland, Michael Matusik, whose email you can subscribe to, who produces a lot of data on the Queensland market in particular. So I know we've just overloaded the absolute crap out of you with different information and different sites here, but what we're trying to say is that almost all of the great information that you need to make much better decisions as investors is available across these websites. We wish you all the best with it, and thank you so much for your time and attention today.
Cheers, guys.